Hi and welcome to your August 2008 market update. My name's Steve McKnight. There's been plenty happening out there in the property market over the past month or so. And first and foremost, I'm not sure if you saw it, a record price set for a piece of real estate in the French Riviera. The bargain price of 895 million Australian dollars. Of course, that's pocket money if you're a Russian billionaire, but for you or me, that's major bickies. I don't think I can even conceptualize a house worth 895 million, let alone understand that that is the new world record. In our own domestic economy, things have come off the boil. You would have seen in the press, perhaps, the retail spending figures showing that the economy is starting to be depressed. Not a depression or a recession, simply coming off the boil. And of course, that's what the Reserve Bank of Australia has been trying to do all along by increasing interest rates. But I've got a handy slide for you in a second that will give you some more insights about what's happening to interest rates. What we are seeing though, and where I want to start, is the median house prices as reported by Australian property monitors around the country. Let's take a look. First of all, Sydney. Sydney's in the red, I'm afraid. It's come off its high in March of 2008, 553,000, back down to 542,000. So that's bad news, of course, for people who live in Sydney. Around the country, Melbourne, off the boil as well. What about Brisbane? Down, down, down. The red ink is everywhere. Adelaide, good news, up slightly, but negligible. Perth, down significantly, 510,000 to 496,000. Canberra, down just a little bit, $2,500. Darwin has gone up. You want to live in Darwin, not just for the heat and the crocodiles, but for the property prices at the moment. And Hobart, up a little bit, but negligible in the grand scheme of things. Really, the link between property prices and interest rates is well borne out in this median house price data, because as interest rates go up, it decreases the affordability because people are paying more of their salaries in interest, and therefore it flattens out property prices, which is exactly what the Reserve Bank wanted to do. As people have less money to spend because they're paying more interest, they spend less, and that takes the stimulation out of the economy. Bad news for house prices though, as you can see. It's interesting because on the back of these figures, Australian property monitors forecast that property prices might fall as much as 10% in the 12 months ahead. That sounds a bit pessimistic to me. I think property prices will probably be down slightly, 10% is a bit high, or flat. Traditionally in Australia, property prices don't fall significantly. They might fall over a quarter or two, but the bottom doesn't fall out of the market. Let's move on then and talk about interest rates quickly, because I have some graphs I've done up for you. The first one talks about how the Reserve Bank has increased interest rates over the past 12 months. And if we count them up, we can see the Reserve Bank has done 1, 2, 3, 4 interest rate increases over that period. And then what I've done at the top here is charted the National Australia Bank standard variable home loan rate over the same period. And if we count up the interest rate increases, 1, 2, 3, 4, 5, 6, 7, 8. So that is exactly double the increases of the Reserve Bank, which is interesting in and of itself. And the line in the middle here, the blue line, is the 90-day bank bill rate. And as you can see, it's trended up and then trended sideways. So the next graph that I want to show you is what I've done is charted the trend lines on both the National Australia Bank home loan rate and also the bank 90-day bill rate. Because in theory, the banks are telling us that their cost of funds are increasing, and that is why that they are increasing interest rates independent of the Reserve Bank's increases. So if we look here, we have 1, 2, 3, 4 interest rate increases from the Reserve Bank, but then we have 1, 2, 3 interest rate increases from the National Australia Bank after the Reserve Bank has stopped increasing interest rates. And if we look at this trend, clearly for banks, the trend is up the whole way along. But interestingly, now what we have is a trend to the top, and then we have a trend to the bottom. So the gap between the bank lend rate and the 90-day bank bill rate is increasing. What does that mean apart from being a pretty slide? It means the banks are increasing the margin or the profitability on their loan product. And it adds greater weight to the discussion, or to the possibility that as interest rates from the Reserve Bank start going lower, the banks will hold or continue to perhaps even increase their interest rates to preserve their profitability. Remember, the ANZ and National Australia Bank recently announced billion-dollar plus losses with exposure into the US market. We have to ask ourselves, how are they going to make back that money? And the answer is, you and I, ordinary investors and other homeowners, are going to be paying higher interest rates or a higher interest rate premium against what they're paying their depositors to make up their profit. Fascinating, isn't it? Now, if you think this is all a bit of a fairy tale, let me just go back a second here, and I've got an interesting an interesting article from the Herald Sun, and I just want to read out this little bit here to you. Ralph Norris, boss of the Commonwealth Bank, has hinted it may not cut rates in line with Reserve Bank of Australia predictions. And National Australia boss of retail banking, Andrew Thorburn, said mortgage rates had permanently split from the RBA's cash rate, leaving banks to do as they wish. Of course, that's what we're pretty much seeing in those graphs, isn't it? Which is a pretty dangerous time. Well, that brings us almost to the end of this update. I really just want to give you a market snap. I'm overseas and I'm about to get on a plane and jump off to Zurich, which is exciting. But before I do, I just wanted to remind you about an upcoming seminar which has very, very good feedback. It's on the 4th of October, and it is the seminar to attend for people who are interested in renovating. Now, with property prices off the boil, you might be wondering, is now a good time to be investing? Well, the answer is it could be if you find the right deal and turn it over quickly, if you can make your value add in that situation and bank your profit. This is Dean Parker's Renovation Masterclass. It is an excellent seminar. It's in Sydney on the 4th of October 2008, the last time it's going to be run this year. It's a full renovation system that takes you from start to finish and everything you know in the meantime. But even better are the checklists and the templates that you get to allow you and empower you with confidence to do a renovation for maximum profit. Dean has included $4,248 worth of these bonus templates for free. You'll be able to get them and start improving your renovation, being able to find, renovate and bank that profit in a much more certain way than if you don't have this resource. Tickets are just $795, cheap when you compare how much you'd pay in a renovation. Just one tip alone is going to save you more than that. Now, Dean ran this seminar for the first time in Melbourne over the last month, and I've just got a couple of the feedback forms and I'll just read them out for you quickly. Sarang says, an incredible system that is worth thousands, probably tens of thousands of dollars, and God knows how much savings in time. Carlos says that he walked away with the tools and systems to start renovating. The content of the seminar and the templates alone are worth far more than the price. Meg says she highly recommends the seminar. Excellent value for money, essential tools, particularly to successfully negotiate. And Dina says that she now has everything she needs to finally get started. No more procrastination for her. So these are real people who came along to the seminar and benefited tremendously from it. To find out how you can book your spot, go to the link on the screen right now or follow the links on the website. Well, I must go and pack, get on that Singapore Airlines flight off to Zurich this afternoon. Until next month, Steve McKnight saying bye-bye for now.